Welcome to Fibocan's YouTube channel. I am Prabhu KB, CEO of Fibocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, and enabling students, investors, and traders and our clients to make their own investment decisions through our comprehensive training programs and innovative investment strategies. In every video, we discuss what happened, why it happened, what will happen, why, when, and how it will happen. Which is why we request everyone to watch the video till the end, click the bell icon, encourage your friends and known person to subscribe. Our educational videos are put in English and Tamil, 16 modules. I would request and encourage people to watch the videos, particularly in the age group of 18 to 22, because after all, it is going to improve their knowledge, hence improve their confidence and their overall personality. So, today is June 10, 2023, Saturday. In this video, we'll be, as always, we'll be discussing about the weekend special, right? Weekend special, we discuss global markets. Global markets, that is Dow, S&P, Nasdaq, FTSE, currencies, commodities, oil, everything we discuss. For the week of June 5 to June 9, 2023, that is Monday till Friday. So, first, let's see where Dow and other components closed. Dow closed 33,877.24, 0.3% up, just flat. Everything remained flat. Nasdaq 13,259.14, 0.14% up, almost like a flat. S&P 4298, virtually flat, 0.39% up. While FTSE fell slightly, 7562.36, 0.6% down. With this, Dow, if you recollect last week, I said that now we gave month video. At that time we took May 31st. That time Dow did not cross 2022 close. Dow is also 2.5% above 2022 calendar year close, while Nasdaq is a stellar performer with 26% up move. S&P is following by 12% up. Now let's go into the today's analysis. So overall, what did all these indices form? Basically, what it formed is, it opened and Dow formed a kind of a hanging man pattern. Okay, Nasdaq and FTSE will talk separately. FTSE is slightly different from the other three. So Nasdaq and S&P formed a doji kind of a candle after a gap up. Nasdaq formed a doji in the weekly chart in the Bollinger upper band after a significant up move last week. However, in the daily chart when we analyze, what it has formed once again doji on Friday. So it has made a significant uptrend, after which it has formed a doji, which means definitely you can take it for writing. That's the power of technical analysis. Monday market will fall, US markets will fall. In fact, the next week itself, if this kind of candle doji after an uptrend doji is forming, normally, see, please understand, I mean, technical analysis is not God. Looking at the technical structure, Monday something, suddenly some extreme positive news can come and things can change. That's different. But assuming everything remains constant, which is why we use the word normally, assuming there is no positive or no significant positive or significant negative news coming, if this is as it is status quo, the market will go down next week. That's very clear. Dow, S&P and Nasdaq will go down very clearly. Also, what is the level that is now available for Dow, S&P and Nasdaq, everything? The 100-week moving average, Dow in particular, is just above the 100-week moving average at 33,604, while Nasdaq, the 100, it is slightly better away from the 100 moving average, which is at 12,874. S&P is just above the 100 moving average, which is 4198.85. So if this 100-day moving average is holding now, it should hold. If it doesn't hold, particularly Dow is in danger of closing below the 100-week moving average. Why? Because when we analyze the individual daily charts, Dow's 50-day moving average is 33,506. It is just above that. That means there is a chance that Dow can break below that, and S&P and Nasdaq can follow suit, because the type of candle it has formed in the weekly, it has potential to form a reversal candle or an evening star we call in the candlestick parlance. Okay, and also the daily looking at the daily chart, it has made a significant up move, hence it has to come down. So Dow now in the monthly chart, it has not crossed above the previous month's high because last month it was a solid red candle, whereas S&P and Nasdaq is well above the previous month's high, but it doesn't mean that it can't come down. In fact, it can form a solid red candle and close below that. That is also a probability because it is just above the Bollinger middle band in the monthly chart. So the texture and structure of these three markets is that it is going to fall definitely on Monday, and next week most likely the next week it will be a fall only, unless otherwise something dramatic, some new event comes which is extremely positive. FTSE on the other hand is looking terrible. It is weak. FTSE formed red candle, big red candle after last week doji. And the FTSE, the only support that is available is 100 week at 7498, which is slightly above that. It is at 7562. The 100 week is 7498, so roughly around 60 points above it. And also in the daily chart, the FTSE's 50-day moving average is 7717, 50-day moving average. So that's only thing, and if it breaks that, it's FTSE is that's the only thing that is available. So FTSE is looking really weak. Hence, now FTSE is something which it is better to avoid at this point in time. So next is volatility index. Volatility index, once again it is at 13.83. In the monthly chart it is touching the Bollinger lower band. Weekly and daily it is sliding nicely down. Such a candle is a delight if you are a bear and you can go bearish. That means the volatility is low. You don't expect a significant up move or down move because of the low volatility. Then that means it is something like what you call sideways market. Once it breaks down on one direction, the volatility will increase. Next is dollar index and its component. So normally if you see these components, there won't be significant up move or down move unlike an indices, right? First we will see where the rates are, then we will go into the analysis part of it. Dollar index closed at 103.533, 0.4% down, while GBP, Euro versus USD closed at 1.0747, 0.4 up. You see the inverse relation between dollar index versus Euro versus USD, and GBP USD 1.2569, 1% up. These two are up, that's why dollar index is down. USD JPY also went down. It mimics or it follows the same pattern as that of dollar index. It closed at 139.34. Last week it was 139.94, 0.4% down. Of course, lost our interest, that's why we cover this also. USD INR, it closed at 82.440, 0.1% up. So dollar index, how did it perform? Dollar index, as you recollect, dollar index last week it formed a hanging man type candle. It formed a solid red candle. So dollar index, it made a significant up move in the last few weeks, which is why you saw some sideways movement in the monthly chart last month. If you recollect, we said that formed a solid green candle, hence there is some pullback happening. So what is happening in the dollar index? Dollar index is above the below the 200-day moving average, but above 50 and 100. So 200 is here. The inverse is true for Euro versus USD. So 200 is here, the 50 is above. Whereas GBP is above all the moving averages in the daily chart. However, in the weekly chart, dollar index in the weekly chart is below the 50 week, whereas GBP and Euro is below the 200 week. That is a 200 and 100 week. Okay, that is how the structure is. So the strongest of the lot is GBP versus USD. Anyway, we will analyze that. So the type of candle that Euro formed against dollar, Euro USD is a spinning top. Once again, second such candle it formed, whereas GBP formed a small, better, solid green candle. In the monthly chart, both formed a small green candle because last month it formed a solid red candle. So there is nothing much to say. However, GBP is formed a relatively better candle because last month it formed a red candle, but a small red candle. This month it formed a small green candle. So as you can see, GBP is supporting dollar index. Otherwise, dollar index would have gone up significantly and crossed the 200-day moving average. Why? When we see the USD versus JPY, it closed at 139.34. It is just flat, I would call. The second red candle above the Bollinger, just near the Bollinger upper band, above all the exponential moving averages. What it signifies? It signifies the uptrend is intact, and also it is above all the moving averages in all the time frames. That means dollar is strong against yen, like anything. Dollar is relatively strong against euro, but GBP is stronger against dollar. That is why dollar index is holding. Next is USD INR pair. USD INR, what happened? If you recollect, I said that it is in the weekly, last week it formed a red candle. This week it formed a inverted hammer kind of a candle. Okay. Normally that is a reversal pattern. Okay. And in the monthly chart, it is forming a rounding top, but it is not going below the exponential moving average. So we had said that in the next 2-3 months, we will have a big breakout, most likely in the upward direction that is going to come. Okay, so when we sum it up, dollar index is now sideways, but it is gaining strength because it is strong against JPY, and also euro is relatively weak against dollar. Whereas the only one that is strong is GBP versus dollar. That is why dollar index is not going above the 200-day moving average in the daily chart. Next is US 10-year treasury yield. US 10-year treasury yield at 3.743. US 10-year at 3.743, which is 1.2% up over the last week. So what is happening? It's, if you recollect, we have said that a few weeks back, we have said that the low that it formed some time back is going to hold for a long time and it's not going to reverse. So what is happening? If you see, it has formed last week, it formed a red candle with a long lower leg, but it didn't go below the lower levels, and now this is now set to go up in a significant way, which is reflected in the weekly chart and also in the monthly chart. Last month it formed a solid green candle. Now once again it formed a solid green candle. Also the structure, how the composition is such that it is set to go up significantly. If not significantly, definitely it will cross the previous year's close in the coming months. Okay, in the next 1-2-3 months it is going to cross. So it is on a strong footing, US 10-year treasury yield. Next is Brent and Nymex. We see that together, Brent and Nymex, we see that together 74.79 Brent, Nymex at 70.74, both fell 1.8% and 1.9% respectively in this week. However, what is happening in the weekly chart, while it formed a solid red candle, both formed a solid red candle, once again it is near the 200-week moving average. That is where it took support and bounced off, right? If you recollect, Brent at 70 and Nymex at 63, it took support and from there it bounced off twice. And also in the weekly chart, the bands are moving in parallel. That means there is exhaustion, selling pressure is over. Same thing is happening in the daily chart, where there has been two reversals that had happened and there is exhaustion and bands are moving in parallel. Normally, if such thing happens, when bands are showing exhaustion and bands are moving in parallel, that means the selling pressure is over. Unless otherwise, the bands are squeezing and there is a new breakout that is happening. But normally, if it happens, it is going to be a breakout on the upward side in this case, because it formed two reversal below the Bollinger lower band and moved up. In the monthly chart, yet again, it is near the, as you know, it is below the 200 month and above the 50 month. It is in between 250, just touching above the 50, below which is the 100 month moving average. If it breaks at 50 month, which is equivalent to the 200 week, I don't think it is going to break. If that is broken, then the next is 100 month and below which God only knows. But I don't think that 50 month can be broken that easily, because that is where the 200 week exponential moving, simple moving average is also there. So hence the downward pressure for Nymex and Brent is very limited from here, which is what we said. And in fact, we can see till now it has formed a small green candle. Of course, in the monthly chart, it started the pressure. Bears are putting the pressure, such a pressure they have been putting for the last 10, 12 months, that it is every month it is hovering and coming down. But somewhere it is going to form a rounding bottom and then go up. That is where it is. But as long as it stays at this level, it is a good sign from an Indian perspective. I am sure you would have enjoyed the technical analysis that you have given for all these components of global markets. See you next week. Thank you very much.